Hey, 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 money makers.
Guys.
How y'all doing today? I'm gonna give you a couple minutes to jump on, start your watch party, share the feed.
Let's go.
Yeah, let's get it. So today,
Let's trade.
yeah, right,
That's a trade.
right. So today we're gonna show you how easy trading is. Keita and I were talking, and I know a lot of times people who are watching and ready to get into this space is just like because it's something new that you have not done before, that you have not experienced before. It's like, can I really get this? Can I really do this? And honestly, 4 years ago, when we heard about this opportunity, I'm not gonna say I was there, but I'm gonna say Keita was there. because even when I joined, she did not. For probably a good maybe 3 weeks.
Probably about 3. I wouldn't say 3.
I was gonna say about a month or two, honestly.
I don't think I gave y'all 30 days of securing the bag without me. Now no.
Well, whatever the time was, she waited because initially the thought process was, I don't know if I could do this. But the tool that we're going to show you guys today, when we started 4 years ago, this was the only tool that IM Mastery Academy had.
Yes.
And even at that time, it wasn't even a web version. Remember, we had to download it.
We had to download. We had to start to figure out what it was saying, and it was a whole lot of other stuff we didn't have, like Forex basic stuff we had to figure out. It was,
yeah, we were really, really committed to being students at that time. Because honestly, had it been a different time or space, we could have easily been like, forget this. But we knew from what we had learned to that point how lucrative, how much learning this in education could like set us free, provide the freedom that we desire. I mean, we were already pretty much free at that time, but we wanted a little bit more freedom.
You want a little bit more freedom, what I mean?
And so anyway, we decided to jump on and do a live to basically show you guys the Harmonic Scanner, how easy it is, like ABC123s.
Yes.
So we're gonna jump in there. So if you are not trading and you've kind of been on the fence, this live is especially for you.
Perfect for you.
It's especially for you because honestly, even in this space, you're always gonna be learning. Let me say that. We've been in 4 years and we're still learning. To this day, we are still learning. But the key is to make a decision and the key is to start. Yep. Just like when you went to college, for those of you all who went to college or decided to go to a trade school, you decide to jump out there and then trust those educators to help position you to get to the end goal that you desire to accomplish. And so that's what we did when we jumped into IM Mastery Academy, and it's one of the best decisions that we have ever made. Now, before we jump onto the charts, I'm going to give you a quick Forex 101 basic education situation. So I'm going to share my screen. I actually got like a little whiteboard. So I'm going to share my little whiteboard. I've been playing around with technology, so this is really cool for me to put my whiteboard on the screen. So 2 things that I want you to understand where Forex is concerned. It's a lot of things where Forex is concerned, but the 2 things that I want to focus on right now, because even those who follow, when you hear us say, I just called 1,000 pips, or I just called 200 pips. You don't know what that means, but pips mean money, okay? There are 2 things in the Forex space. If you can learn these things, you'll be well on your way. And so that's pips and that's lots, okay? So you have your pips. Let me cut my little pen on. Bear with me. So you have your pips and then you have your lots. I'm loving this little whiteboard. So anyway, so let's kind of talk about this, okay? So pips are basically the change in the exchange rate. So if any of you, excuse me, I can't spell too well right now. There we go.
That's all right, you catching those pips.
Right. Pips pay my bills. So basically, pips are a change in the exchange rate. So if you've ever traveled internationally or even been in the airport where you walk past a little exchange and you see the numbers and stuff moving, Those are pips moving. The beautiful thing about the Forex space is that you're able to trade from your phone. So you don't have to leave the United States and go to Dominican Republic or go to Europe or go to Australia. You can literally learn how to analyze the markets and trade from your cell phone, okay? So you have your pips, and then your lots determine how much. They determine how much money you gain or lose with each pip move. Lord jeez. There we go. Excuse me, y'all. I'm excited with my little whiteboard. With each move, okay? So the goal is to be on the right side of money where this comes into play. So the goal is to be on the right side of money where those trading things actually happen. So let me kind of give you an example. Let's look at gold. Gold is one of the things that our team loves to trade. We call Marquita the gold queen. When we started 4 years ago, 2 years prior to that, we had literally, 2 years prior to that, we had literally just started saving physical gold. So when we joined this space, that was really one of the reasons why Marquita had no interest. Like, I got some gold, I'm saying, you know, I'm good. But one of the things that she learned was that not only can we own physical gold, you can also analyze the markets to see when gold is moving, how it's moving, and it allows you to set up and trade in the market, but it also allows you to make good decisions when you want to buy more physical gold. So it was allowing us to play on both sides of the field. And that's the same thing even with cryptocurrency. In this space, you can learn to analyze the charts to see how cryptocurrency is moving to know, should I get ready to buy some cryptocurrency, or should I hold, or should I sell? Like, through this space, it allows you to get in on both sides by we own crypto. We have Bitcoin, we have Ripple, we have Ethereum, but we also analyze the markets to know when is it time to grab some more Ripple, or when is it time to grab some more Ethereum or Bitcoin or even gold. So that's the beautiful thing about this space. So back to what I was saying. So let's just say with gold, our team just threw, Marquita just threw the team an amazing trade idea on gold. It was a sale. So let's just say, for example, the entry was 1717.05. Yep. And maybe I shouldn't even use gold because lot sizes are different with gold than traditional Forex. Now that I wrote that, I don't even want to talk about gold no more. I don't want to confuse y'all. So let me go and delete that real quick. Delete. So anyway, so with the lot sizes, and it's something else that I'm going to show you, but you learn how to calculate your pips. So let me just give you another currency pair. I'm going to pull up a currency pair so I can tell you. Let's look at USD JPY, which is 106.276. And I made that 27 big for a reason. When you get into your trading app, you have your MetaTrader 4 app, as you can see here. Now within this app, these big numbers are your pips. So it's easy to identify those pips, okay? So what happens is this. Let's just say we are buying USD JPY, and this is your entry, okay? If this exchange rate goes from 106.276 to, let's just say, 106.066, okay? The tongue tied. What you need to do now is find the difference between those 2 points. When you find the difference between those 2 points, it tells you then at that point what your number of pips are. So you do your basic math that we didn't think that we would do when we became adults. So you do your basic math. And I like this math because this means money. It's showing me how I'm making money. So when you do the difference between those, the answer is 21.
Right.
So that's 21 pips. So now you're like, okay, Camille, so I get it. 21 pips. What does that mean? This is where lot sizes come into play.
Yep.
Okay. So now with lot sizes, this plays a role depending on your account balance and what you're able to actually leverage. But it's the same across the board. And Kitty, you can jump in here whenever you want to. But it's the same across the board. So if you have 0.01, that looks like a penny, but that's really 10 cents per pip.
Yep.
Okay. Now, what that means is, like I showed you back here, if that's 21 pips in that move, you would take 21 pips times 10 cents, and whoever entered that trade and got 21 pips made, what's that? $2? No, I did that wrong. 01. I was like, wait, that looked wrong. Hold on. Oh no, that's 10 cents per pip. My bad. So that's $2.10. So whoever did that trade made $2.10. Now, on the same space, if you had a 0.10 that looks like 10 cents, that's really $1 per pip. Okay. So the person who did this exact same trade, instead of making $2.10, they made $21.
Mm-hmm.
That makes sense. So all of us can literally be in the exact same trade, but our account balance, the okay, but she's so extra. Like some big numbers. I'm gonna get there. Let me just start. Just hold on. So
I know we on baby steps with everybody else. Right. We graduated from this.
Right. She's like, look, this is not impressive to me. So anyway, so the person that does that is that. Now the next you have is a standard, which is 1.00. Looks like $1, but it's really $10 per pip. So we could have all entered the same trade, me, you, and Marquita. Now, of course, I did the standard. Marquita did the 0.01.
The lies.
So a standard as $10 per pip is really $210 that was made in that move. So I hope that makes sense. So if you're watching and that makes sense, please put a 1 in the chat so we know that makes sense. Okay. Yeah. And so your lot sizes can literally, as retail Forex traders, can literally be anything from 0.01 to 1,000 lot, which is equivalent to 10 cents per pip all the way up to $10,000 per pip. Mm-hmm. So imagine the person that had, you have to have a big account for this now, who had 1,000 standard at 10,000 per pip, and they moved a 21 pip move. How much money is that? Let me put my calculator. How much money is that? 21 pips.
Yes.
Times 10,000 per pip. I mean, it looks pretty nice. It looks like roughly about, 210,000. So you can kind of see the possibilities where Forex market is concerned if you apply the education, apply the skill set so that you can learn these things. So that's just my quick crash course.
Right. But before she goes to the next part of what we're going to share with you guys, this is one of the things, although I was joking around and was like, hey, let's see what it looks like on a larger scale. One of the things that we're extremely passionate about is making sure that traders use risk management, that you have a full understanding on how to calculate pips in conjunction with whatever your current lot size or your balance is. So that is extremely important when it comes to trading the foreign exchange market. And especially when you start jumping over into indices and trading, commodities like gold that we trade, or trading Forex pairs. There's a big difference in it. So when learning this space, this is the very basics. You can't skip you can't skip this right here. So you have to learn how to calculate pips to even understand the amount of money that you can potentially make, or if you're over leveraging or you're gambling, you can potentially lose. And so we want to minimize the losses so that way you don't have a gambler's mentality and gambling in the market versus actually being a very strategic trader. And we teach you guys how to strategically pick certain pairs so you're just not all over the place. You master a particular pair, you study the trend of it, then you'll be able to get up to those significant lot sizes. But you want to work your way up there. And over time, we've been able to work our way up when it comes to trading based on our account balance and the lot sizes that we actually throw. So now we're going to show you something else.
Okay. So I'm sorry. One of my new traders, she was just like, wait, I have an urgent issue. Gold is not moving.
The market is stopped right
The
now.
market is close. I had to let her know, don't panic. The market is close. But we are fine. But we are fine. Okay. So let me stop sharing that. I want to jump over to the Harmonic Scanner. So this is going to be really cool. As I talked about, the Harmonic Scanner is like the flagship product of IM Mastery Academy. Where's the Harmonic Scanner at? Hold on. There we go. Okay. It's one of the flagship products of IM Mastery Academy. And one of the things that we started trading when we first started. And so everyone who plugs in with IM Mastery Academy has access to this. And I know right now it looks like, Camille, what in the world are you and Marquita doing showing us this chart? But I promise you, it's a lot easier than what you think. So once you log into the Harmonic Scanner, this is literally what you see. So one of the things that you're going to learn in an IM Mastery Academy is about harmonics and harmonic patterns. I can be honest and say, to this point of being in here 4 years, I have yet to master or even attempt to really learn how to draw these patterns myself. I've, spent time learning other things from a skill set standpoint. But the beautiful thing about the Harmonic Scanner is that with the algorithm set up, it finds the patterns for you. And so what the scanner does is it shows you it helps you recognize reversals. So in recognizing reversals, you're able to know the market is about to trend in a different direction based off of these harmonic patterns. So there are a couple of things I do within the Harmonic Scanner that I'm about to show you guys. So let me see. So one of the things is you see your traditional candlestick. So if you're looking at a candlestick, the red candlestick means the market's going up. Red means the market's going down. You see 15 here. So that means this is a 15-minute time frame chart. So that means every candle represents 15 minutes of activity. So for 15 minutes, this candle went, the price went up. For another 15. So for 45 minutes, the price increased. But then another 15 minutes later, it declined. But then it went up again. So that's how you read the candles to know the activity. But at the end of the day, instead of reading candle by candle, you want to look at the overall move. So even though you see lots of ups and downs, the goal is to recognize the overall trend, okay? So one of the things that I do on the scanner that I, just from my analysis and testing, instead of using your traditional candles, I use what are called Heikin-Ashi candles. And Heikin-Ashi candles are really, really cool because instead of seeing all the ups and downs in the market, the candle stays red if the overall trend is down, okay? The candle turns blue if the overall trend is up. So it helps you more in your analysis. So in this whole video, well, it's not a video, it's really a live. But in this live, we talk about how, it's easy as ABC123. So I really said that to play off the whole aspect of the Harmonic Scanner. So let me try to zoom a little bit because I want you guys to be able to see this. Okay, well, I want you to be able to see everything. So as you notice with the pattern, you have your A, B, C, D. So within this strategy, you are looking for the D, okay? So when you see the D, let me add this one thing. So I mentioned to you why I added the Heikin-Ashi candles because it helps you see the trend better. Another thing that I add is called Bollinger Bands. So Bollinger Bands are really, really cool because they act as rubber bands. So if you look at the chart, you can see if the candle like here came outside the Bollinger Band, it pushed it back in like a rubber band. It came outside the Bollinger Band, it pushed it back in. So whenever I am trading and looking at this strategy, it's a couple of things that you look for. So this is for the brand new person. If you can follow a checklist of, let me see, 1, 2, 3 different things, then you can actually start trading today. So the first thing is this. You want to identify the D. As soon as you identify the D, you are looking for your candle or the wick of the candle. You see that line right there, touch the D. This is an indicator that it has gotten to a point for potential reversal. Not guaranteed reversal, but potential reversal, okay? So some people may tend to immediately try to jump into the trade, but that's not the time to jump in the trade. Another thing you are looking for is for the candlestick to break the Bollinger Band. Because remember, I said when the candle comes outside the Bollinger Band, it pushes it back in like a rubber band. So now you're looking for that. So this trade is not actually set up right. Well, it's not ready. It's not a bad trade. It's just not ready. And that's the key in the Forex market is patience. You have to definitely be patient with yourself in this space, or you can lose a lot. Okay, so it's trusting the process, having your checklist in place. Once those things are in place, then you execute in accordance to that. So looking at this particular example, I'll come back to it to check on it before we get off. It's not showing what I want to show right now because it's not ready. So I don't want to waste time waiting. We'll come back and check it. However, let me go to an older pair, something that's already moved. Okay, so this is perfect. So let me show you what I look for. So this trade has already moved. Everything has happened that needed to happen. So using your Heikin candles and using your Bollinger Bands. Okay, so I don't think it's a way for me to write on here, but this is what you're looking for. As I mentioned, you identify the D. So you got your A, B, C, D. So this D is letting you know that you're getting close for a reversal. So what happens is you see your candlestick wick hit the D. That's the first thing you're looking for. If that's happened, check that off your list. The next thing you're looking for is for a candle to break outside this Bollinger Band, which is this blue area. It broke out here. So check that off your list. Once that is checked off, the next thing you're waiting for is a blue Heikin candle that has a flat bottom. As soon as you get a candle with a flat bottom pushing up, that is your indication to enter the market, okay? Now remember, when the Bollinger Bands, when the candles break outside the Bollinger Bands, it bounces or pushes it back in. So now that you are in the trade, you are looking for your take profit. So let's talk about this. There are different levels of taking profit. Take profit basically means whenever the market gets to this actual point here, whenever the market gets to this point, take my profit and run. So there in the Harmonic Scanner, you tend to get 3 take profits. So you can see take profit 1, you can see take profit 2, and you can see take profit 3. I always pick the take profit, the highest take profit that is still within the Bollinger Bands. So in this case, take profit 2. I literally did this trade today, okay? So you have take profit 2. So what happened was the candlestick touched the D. The candle came outside of the Bollinger Band. And once those two things happened, I waited until I got a solid blue candle with a flat bottom. You see how you got these little wicks or lines? You don't want that. You want a flat bottom, which gives you a strong indication of a strong bullish or uptrend or a buy. And then at that point, you enter your buy. In my case, as I stated, I did take profit 2 because that's the highest take profit that was in the market. I was in between the Bollinger Bands. Some people will just do take profit 1. So once you're into that trade, the scanner is literally telling you take profit 1, take profit 2, take profit 3. It's even giving you a stop loss. A stop loss helps you to protect your account from blowing it, meaning lose all your money where you have to refund it. So remember, trading is risky. Past profits do not are not indicative of future results or future profits. So trade at your own risk, okay? So what happened is both of those happened. When I saw this blue candle, I entered in for a buy, okay? Now I'm looking for my ruler on the side so I could tell you. Well, let's just say I bought here at 131.07 and I wrote it to 131.48. That was a 31 pip move from here to here. I made 31 pips with minimal analysis, or really no analysis, but 3 things on my checklist. Did the candle touch the D? Did the candle come outside the Bollinger Band? And did I see a bullish candle or a solid blue candle with a flat bottom? Those three things give me my indication to enter the trade, to ride it to my take profit. And so literally that is how we learn how to trade. Like, we didn't know about Heikin-Nashi candles and stuff like that. But when we first started, that's all that we did. We know nothing except take profit 1, 2, 3 in your entry. Okay. So now, as we continue to evolve in this space, this is a tool that the average person who's never learned about Forex can jump into this space, learn how to enter and exit a trade, learn about proper risk management, and then use this tool to start positioning yourself for wealth. So that is that in a nutshell. I think I have a question. They said, do we wait for the candle with the flat bottom to close? You can definitely wait for the flat bottom to close. I do it both ways. It just depends. Like on this one, I literally just jumped in because it was a strong push up, and I was pretty confident because the candle before it was already blue. So because the candle before it was already blue and it was a strong rally up, I went ahead and jumped into that position. So let me see if I can find a sale. If anybody else has any questions, definitely feel free to post them. I'm looking for a sale so I can show you. So this is another one that actually happened, and I just want to kind of show you guys what we were looking at. So once again, and you have your entry. So let me say this about the entry. Your entry is just a zone. It doesn't mean that this has to exactly be your entry. It's just giving you an idea of where your entry may potentially be. So in this case, the candlestick touched the D. The candlestick came outside the Bollinger Band. You now wait for a flat bottom. So Davina, in this case, I would have waited for the next one. And then I would have taken this to take profit 1, honestly, because at the time this came through, only take profit 1 was inside the Bollinger Band. So I would have taken this to take profit 1. But as you can see, this one continued upwards and has surpassed take profit 3. So that's how we move and how you look at the scanner. So this is showing you how all y'all can trade. We can all go trade together. Let's go trade together. Like, seriously. Let me see. Scott said he ready. Let's go, Scott.
Let's go, Scott. And the real cool thing about it too, you guys, is that what she was just showing you from the entry point where she would have took profit at take profit number 1, and you saw how it continued to keep on surpassing that and going all the way up to take profit number 3. This can help you to determine if you are a scalper in the market or if you're a long-term trader, because although it moved up, let's just say it did not take for it to hit take profit number 1, let's say only took maybe an hour to reach that zone. But let's just say to hit take profit number 3 and above, it could have taken a few hours. So this is how you determine whether or not you are a long-term trader. You're willing to sit back and wait for that particular trade to close out and you'll be able to catch even more pips, or you can get in the market, get out of the market, go and look for another trade setup and continue to keep on increasing throughout the day.
That's good. So yeah, oh yeah, Tasha, yeah, she said she been using those Bollinger Bands for a minute. Yeah. Bollinger Bands is where it's at. I don't care what nobody's saying. I love Bollinger Bands. But anyway, so that's literally how this space works. It's honestly so much more vast than this. But the fact that we have a tool that the person who's never traded before.
It teaches you the baby basics. After that, there's so much more that gets into it. You start, learning market structure and support and resistance and trend lines. You start trading a whole lot, but this is like really gets in there and it gets you to start seeing zones. It allows you to start seeing where take profit points are. It gets you in there, and then you get to look at the different charts and stuff like that, butterflies and flags and all that. So it literally sets it up for you. But why not have a tool that you can literally open up no matter where you are? You can be sitting down watching TV, and this particular harmonic pattern is working for you around the clock, where you could have been at work, and as soon as you open up your scanner, it's already looking at trades on your behalf. So when you open it up, you're just picking and choosing, looking at the current market, where it's at in conjunction with where they're telling you to enter on a buy and sell. And then after that, you're just basically pulling the trigger and you're jumping into the market based on what you see. And then outside of that, the more you continue to trade, then you start adding on more, and then your skill set becomes even more perfected, which is amazing. So why not have an amazing cheat sheet like this? So this is why we wanted to show you guys how simple it is that anybody could really jump into the market, learn the skill set, connect with us, and be able to start learning how to trade.
Absolutely. So I'm just checking to see if there's anything new out there, because this is pretty cool so here's a good one. I might need to get ready to enter this trade, you guys.
You're ready to go.
Great idea. So this is USD CHF. No, it didn't go outside the Bollinger Band yet. So that's another thing. When you come up with your strategy and what you're doing, you stick to it.
Right.
Don't deviate. Because looking at this real quick, I'm like, shucks. And if you look, now that I look closer, it has not touched the candle has not touched the D yet. Even though it looks like, it came down. Now I see a flat bottom heading up. I need to get in, but all your pieces and parts are not together. So Forex also teaches you discipline. When I tell you, I've, seen like nice profit, but I've seen losses too, just by not sticking to the plan. And so that's another thing, discipline and sticking to the plan. Best time to trade the Harmonic Scanner, someone asked. I check it throughout the day. Honestly, the biggest market. So you'll see more activity during London session because it's, a lot of activity. You'll see a lot during New York. You see it slow down around this time. So it flows with the market. So the scanner is constantly checking for reversal patterns throughout the day. But of course, in your bigger markets is when you'll see bigger activity. So I mean, that's the scanner in a nutshell. I mean, it's not real deep. It's not real deep. So just to recap.
Did you get Brooks? What did he say? Does it have to change colors? Did you do that one?
Let me see. Does it have to change colors? I prefer. So here's the deal. If it's in a downtrend, meaning overall sell with red candle, let me pull another one. I wait for the color to change because that is an indicator of the direction change. So I don't just wait. Let me find a pair. I don't just wait for the color the next candle. So some people, once this touches the D, they'll enter the market. But if it's still a downtrend, you're putting yourself in more drawdown than you necessarily have to. You know what I'm saying? So for me, if it's a downtrend saying it's looking for a buy or a potential buy, even though it's touched a D, I'm waiting to see the color change to blue to signify that the buy has begun.
Right.
So that's what I'm looking for. So yes, I do wait for the color change.
Good question.
Okay. Any other questions? If you're not trading with us, you should be trading. Get with the person who shared this video with you. Like, we definitely want to get you going. Like, seriously, this has been one of the best things that I could have ever done.
Yeah. And we spend personal time like this with our people, because we want to make sure that you guys get it, that you got it.
Yep. So anybody else have any other questions? It's not really a lot. And I didn't talk about this, but when you scan the market, you have 15 minutes that you can scan. That's more so for our scalpers or people who like to get in and out. And then you have your hour, 4 hour a day, which is more long-term for people who are wanting to do longer term trades. So with the strategy that I show, we more so use it on the 15-minute chart. This particular example right here, you can see it touched the week. It had to be some news or something for these long weeks to be here.
Right.
It had to be some news. But technically, if I was doing the hour, which I don't trade the hour, I would get into the trade on this candle and I would stay in this trade until it hit take profit too. Okay, because my entry was here. So some people would have already jumped in. You honestly looking at this, you probably would have been teeter-tottering back and forth in and out of profit. But I recommend even getting in your demo account and testing out what you're seeing in the scanner once you're in the system to see what works best for you and what you have going on. So I'm just kind of clicking around to see. So this is one of those examples here of a strong move up. So I probably would have, this one went straight to take profit 3 almost in literally what? That was an hour move.
Yeah.
So, yeah. So yeah, I trade the 15-minute. I probably need to trade the hour to test it out to see, you know, and one of the things you can do, I won't even go into all of that because that's more Forex talk and I'm not trying to.
Yeah, that's what I'm because I see something I wanted to say, but I'm like, I'm not about to confuse.
Yeah.
I'm not sure. I don't want to go over the head.
Right, never mind. So yeah, so that is that in a nutshell. And I'm just clicking around real quick just to see. Did anybody post any more questions?
No, everybody said it was good. They understand. They got it. Perfect.
Okay, perfect. So yeah, so this is the scanner in a nutshell. Like, so if you're not trading, you should be trading. We wanted to show you how easy it is to get into this space, to learn how to trade in the Forex market. Just to recap for our people that just got on the line, I'm gonna pull up one more or recap one that I did. I just be clicking on them, so I don't remember which ones I was looking at. So let's see. It's refreshing. And we're going to get ready to wrap the call in just a few moments.
Yeah, so make sure that if you're watching, if you're sharing this, wherever you saw it, get back with that person. If you're on ours, make sure that you message us so we can go ahead and get you guys going and getting you started. Remember, this is education. This is education without an income cap attached to it. And it's a blessing to be able to trade in a $6.6 trillion a day space. So don't take this for granted. Even us showing you guys this is privileged information, but we want to make sure that you guys don't just watch and see us talk about how many people we're affecting and talk about the pips and what we're catching, but yet you still have no understanding of what it is that we're talking about. So that's why we came on here, so we can show you guys how simple and how easy it is to basically learn how to trade in the foreign exchange market. And the beautiful thing about it, if you're trading with a team of people, it makes your education and it makes your learning process a lot easier because you can bounce and fun. You can begin to bounce ideas off each other. You can be able to say, I can call Camille and say, hey, Camille, we trade all the time, 24 hours a day around the clock with each other. So I'm like, hey, Camille, check out this setup. I think it's going this way. And she put her eyes on it. We say, I think it's not ready. And then we find the perfect entry. And so this is what we're talking about. So you guys, look, get back with the person quickly, like ASAP, like right now, and get connected, get into this space so that way you can start leaving a legacy and for your children and your children's children. You can teach your kids how to do this. So it's really that simple.
Yep. Excellent. And so just to recap, it's 3 things we look for with the Harmonic Scanner. First of all, we use the Heikin candles and we use the Bollinger Bands. Okay, so the first thing you're looking for is the candle wick or the candle to touch the D. Once it touches the D, now you're in position to start looking for the other things. Did the candle break outside the Bollinger Band? As I mentioned, the Bollinger Band acts like a rubber band. Right. Whatever price comes out of it or the candle, it pushes it back inside. Just like over here, you see it came out, it pushed it back inside, and so forth. So now that you see that it came outside the Bollinger Band, that's number 2 that's checked off. Now that those things are happening, all you do is wait for a solid flat bottom candle in the direction you're looking to go. So if you're looking for a buy, you want a flat bottom at the a flat bottom and blue. If you were looking for a sell, you want a flat bottom red. I mean a flat top red going down. That gives you indicator of a strong momentum in the direction that you're looking to go, and then that's when you execute and you move. So yeah, so guys, that's all that we have. That's all we got. Yeah. So we just wanted to jump on here and show y'all how easy it is to trade. As easy as ABC 123. You find the D and you look 1, 2, 3 for your take profits. Pick a take profit, execute the trade, trade at your own risk. Past profits don't guarantee future results, and all that good stuff. And we'll see you on the other side of money. Get connected with us or whoever shared this video with you. We're happy to help you get started. So we'll see you guys soon.